welcome to the Stock Market Morning Prep video for Tuesday, August 18th. Green across the board. We continue to get some upside movement on the de-escalation of Russia and the Ukraine. The other two conflicts are starting to heat up even more. We have Israel and the Palestinians, and then we have, of course, the Iraq situation. So, still amazing. Crude oil continues to really take it on the chin. I'm really starting to like crude oil at these levels. I could see a little more further downside. I'm not going to get into the analysis of crude at the moment because it needs a lot of work. And I don't want anybody just looking to go out and buy crude oil. I mean, obviously, for a day trade, if you see a situation where may have based and starting to move higher on volume, maybe. But I am looking at some of the beaten down oil names. Starting to look for them for some upside movement, at least a retracement rally. I do like some of the home builders. They're starting to look pretty good. We had some good, decent home numbers come out yesterday. Lumber continues to move up a little higher, so that's going to help the home builders. So I'm starting to like the home building sector. I'm starting to keep an eye on those, and also some of the solars are starting to move, and banks as well. So where do we think this market is going? So what I did today, I put an analysis on some of the correlated and uncorrelated, some of the currencies that give us a clue of what's going on. Right now in front of you, you have the stocks above the 50-day moving average. What this is telling me is that a lot of movement in the stocks have not been of late. Most of it has been in the indices. But what this also tells me that we do have plenty of room to run to the upside before we become oversold in the indicator, or at least come to an area where the markets start to roll over again. As you can see here, we did this up in here. So there's plenty of room still to run to the upside, but this also telling me that stocks really aren't moving. The indices are moving. So that's a very good indicator. Here's a McClellan oscillator. And I mentioned every time we get that close inside the Bollinger Band, we usually get a little bit of a bounce. And sure enough, not only did we get the bounce, but we've been up almost 5-6 days in a row, and now we're approaching some overbought levels. We are not there yet. I think maybe another day or two, and then we would see where we go from here. Remember, we have a bullish inverted head and shoulders pattern in the hourly chart of the E-mini S&P, which measures 2000, 2006. Wouldn't surprise me if we get there. Shouldn't be in a straight line, but the way the markets are, I wouldn't put it past it. It's just absolutely crazy. Especially when you have low volume markets movement. The market movement actually becomes a little bit exaggerated. All right, so let's go right into the charts here. The ZB did get a little bit of a pullback after touching our long-term target of the 1618 extension. Would you start buying here? You know, I don't know. I mean, the bonds are definitely in a short squeeze, but what happens with bonds is that you can get 1 or 2 nasty days down and then start to retrace back up again. That's the way they work. As you can see, we get 2-3 big days down, then we start rallying again. 2 days down, we rally. We had 2 small days, we rally. Now we have 1 day, and now we're up again in the pre-market here at 10 ticks. But you know, I wouldn't buy. I would wait for the bonds to come back down to at least a 20 EMA, and then kind of reevaluate it. But it's definitely a good hedge on the portfolio. Would not mind owning this longer term at cheaper prices. Now let's take a look at the dollar. One of the reasons why gold and crude and a lot of the commodity grains, soybeans, commodities have been really beaten down is because we've been having an explosive move in the dollar. And as you can see here, we had this big descending triangle with this downtrend line. We broke down really hard that 1 day, and I remember that in the video, and then we kind of rallied. We sold off, and that's what it does. It overshoots the move, and then it kind of gets everybody to the downside and starts to rally hard. And we've been really rallying ever since pretty much the beginning of July, and we're continuing to rally, as you can see here. And this basically is safety trade, safe haven trade, where people are in doubt of the market. They put their money in safe sectors, utilities, consumer staples, healthcare, and of course, the almighty dollar. I mean, the dollar is the safest currency out there, aside from the Japanese yen, which I have no idea why they think that is, and or the Swiss franc, but that's pegged to the euro, so that alleviates that. So really, it's the old almighty dollar here. So stronger dollar, you're gonna have weak commodity prices, and that's actually adding fuel to the fire in crude oil itself as well. You will get oversold bounces in the intro, but keep an eye on that if you're looking to trade any commodity stocks, gold, the metals. oil or the soft commodities such as the grain markets. Okay, so definitely want to look at that intraday while you're watching that. But this also does affect our market as well. And here is the Japanese spot yen, which is inversely correlated to what S&P does, right? So we have lower prices in Japanese yen. We have supportive prices in the equities, U.S. equities, and that's what's happening here. And I wanted to show this to you. We had this ascending triangle, and then of course we had this inverted head and shoulders that we kind of described, and now it just kind of went too far into the apex. We have this little cluster, and this cluster held pretty much actually all of 2014, and now we're breaking down again, and now we're starting to roll over again. So if you see this starting to break down, this will support higher equity prices. And if you look at the dollar yen, which is correlated, the dollar yen has been really, and I do trade currencies, but this is currency markets have been kind of actually very, very quiet of late, especially up until July. You can see this been in this descending or symmetrical triangle all of January, all of 2014, excuse me. Now, but I wanted to show this to you, it's starting to break out of this descending triangle again. It tried here back in July and it failed. It tried again and failed. But now we're at the apex here where it's building pressure. If this starts to move up, this will support equity prices as well. So just keep that in mind, okay? Stronger dollar, dollar yen, weaker yen, this is going to definitely support higher prices. So this is what you want to watch during the day as well. If you don't like the inverse correlation, then you could use the dollar yen here as well, okay? Now let's jump into equities real quick. Really, guys, nothing happened. Very, very quiet market. Market gapped up and stayed up and just basically was range bound pretty much most of the day. A lot of stock prices made their move the first 10 minutes. Dollar, here's the U.S. equities again, 1971. We're up again, 3 handles. So you could see, and that's why when I say we're into the sweet spot, we're just about here now. Well, actually, we're not here now. We're surpassed the sweet spot of a possible rollover. So to me, when I see an area where I want to short, just because price is there, it needs to give us a trigger, and it has not done so. So all bets are off on the downside unless we get some erratic movement today or tomorrow and a real push down. We can get back down below 1940-ish. That would be a great area for me to start looking for some shorts. But I'm not going to short the market. The market has been now alleviated this downside pressure and has a bullish pattern on the hourly chart, which I'll show you, and has been up now for 5, 6, 7, well, at least 5 days, 5 trading days. So again, guys, buying the dip is intact and well in force here. Inverted head and shoulders I've been showing you. We've been up again, like I said, at least 5 days in a row. Boom, boom, boom. And now we're looking for the target of 2006 would be the 1272 extension off this small move lower. So the move target is 2000 and the extension is 2006. So to me, I think it overshoots and it gets there. Maybe not straight up in a straight line. Might have a down day or a couple of pause days, but I think it does get up there. Okay, so I would not be looking to short the market at the moment. IYT Transports again, ripping to the upside. Held this level here that I showed that my first target was. I would have liked to see this get down to this 200-day as well as all the other indices. Hasn't done so. So again, all bets are off. We have upside targets of 1272 to 1618. The next target would be challenging the highs here, okay, in the transports. Nothing wrong with the transports. Unless you're doing some sort of an option play, I would not be looking to short the transports as well. This is our main leader of the indices. Now we have the IWMs. We have our low to high here from way back in early August. I did a small retracement here to give us a couple of upside targets of the 1272, 1618 extension. That 61.8% retracement needs to hold. Otherwise, if that does break out, you'll hit that 1272, and then it would probably end up hitting the 1618 and then challenging the highs here. Now remember, it looks like it to me, and it does look like that we have this downside pressure of lower lows and lower highs alleviated. Now we're moving higher, so I would not be looking to short the IWM as well. And then, of course, we have lastly is the Qs. As you can see, upside targets in the Qs, the 1272 and 1618. We made new highs yet again. Internet stocks, social media, they're all doing pretty good. So don't fight the trend. The trend is your friend, as you all know. So just stick with the buy side. Look to buy some dips, or look to buy some decent stocks that have been into support. It's been tough. It's been quiet, but you know what? 2, 3 trades a week could get you a good paycheck. So be patient. I do see volatility obviously starting to pick up. I can't wait to September. Once we get through Labor Day, everybody will be back to work again. And then we should get some really, really some good price action. Have a great day, everybody. We'll speak to you tomorrow. Take care.